Welcome. We're going to be talking about margin of safety. We will calculate for break-even points, target operating profit, and then margin of safety. So here's an example. We're going to calculate the break-even point just using logic and math a bit here. So we have the input here with the sales, the variable cost, and fixed expenses. And to calculate the break-even point, well, we'll start off with an equation, if you want to call it that, because it's actually, if you look at this, it's actually the income statement on a horizontal basis. So if you consider the top line being sales, under that you'll have variable expenses. Under that you have fixed expenses. You draw a line across, and that gives you your operating profit. That's what it means here. So sales minus variable minus fixed expenses is operating profit. If we turn that around, bring the variable and fixed expenses on the other side of the equation, we have sales equals variable expenses plus fixed expenses plus profit. Now, in the case of break even, that's the point where profit is equal to 0. So now we can enter the numbers involved here, with Q representing the quantity of units sold. So 250, which is the sales price per unit Q, equals 150Q plus $35,000 plus 0 being the profit. Collecting the Qs, we have 100Q is $35,000. Q is 35,000 over 100, or 350 units. So now we know the break-even is 350 units. To calculate the break-even in terms of sales dollars, you compute it by just multiplying the number of units for the break-even level, and then multiply that by the selling price. So 350 units times $250 per unit will give us 87,500, which is our break-even level of sales. Now, in the case where we have a target operating profit, we just use the same equation, except now we're using an example with a profit of $30,000. So here we have sales minus variable expenses minus fixed expenses. Again, it's profit, turning that around the same way we did last time, but now we have a profit which is not 0, it's 30,000. So our target profit is 30,000. So here we have 250Q is 150Q, 250 and 150 being the sales and variable cost, plus 35,000 plus 30. Collecting the Qs and the numbers, we have 100Q is $65,000. And so Q is 65,000 over 100, or 650 units. That means that's our target, 650 units. In terms of dollars, we're again just going to multiply the 650 units by the $250 per unit, which gives us a sales target of $162,500. Now, calculating the margin of safety, we can do it in terms of assuming, of course, now we have our target sales of 162,500. We can calculate the margin of safety in terms of units, in terms of dollars, and as a percentage. To recall from the chapter, margin of safety represents the amount of sales that can be lost before we reach the break-even number of sales. So it's telling us how much we are above the break-even in comparison to the amount where our target sales or how much we're selling. So here we have break-even units is 350 as we had calculated, target sales is 650, so our margin of safety is simply the difference, or 300 units. Again, that means we can lose 300 units of sales compared to what our target is of 650, and we'll still hit break-even. Now, in terms of dollars, it's just telling us how many sales dollars can we lose off of the 162,500 and still remain at break-even or above, right? So that one, we can simply take the margin of safety in units and multiply it by the sales price. We have the calculation in units, that was 300, okay? And then we can multiply that by the 250, $75,000. So we can lose 300 units times the 250 per unit, or $75,000 off of our sales is 162,500, and we're still at break even. Now finally, as a percentage, This will tell us what percentage of sales we can lose off of our present sales, and we'll still hit break even. That is simply the actual margin of safety, either in units or in dollars, divided by our target sales, or the sales that we are looking at in units or dollars. Now, taking the units values, we had 300 units as the margin of safety, and the sales are 650 units. So that gives us margin of safety of 300 over 650, or 46.2%. I'll leave it up to you to calculate that with sales dollars, where our margin of safety was 75,000, and of course the target sales are given here. Anyway, that's it for margin of safety. Thank you for your attention.